And thank you, everyone, for being here tonight. This is the third and final day in a tour that we organized with Don Morgan, who's the president and CEO of the Bank of North Dakota. As the introduction said, my name is Mark Rosero Rossi. I'm the executive director for Washingtonians for Public Banking. We are a nonprofit, nonpartisan organization dedicated to fighting and creating public banks throughout Washington State at all levels of government. As I mentioned, this is the third and final day. I've been really enthused by all the people who've come out. We've actually had people come to multiple presentations. I was joking with Don that he's forming public banking groupies here in Washington because people are coming out to see him speak, which is very exciting. It does seem that we're at a moment where this is an idea whose time has come. People have been working on this idea in Washington State for over a decade. And we are seeing a bubbling up, a real grassroots movement to realize this in our state. And I do want to take note to one of the reasons we wanted to speak in Bellingham is the Bellingham City Council is the only council in Washington State that's passed a resolution in support of public banking, which we did several years ago. We should all be very proud of as well. Before I introduce our first speaker, I do want to recognize some of the sponsors who have made this event possible. So this was possible because we did get a grant for Communities of Opportunity for the King County Department of Health. We also were sponsored by Beneficial State Bank, which is a community bank and a CDFI that operates here in Washington State. And then finally, we have to give a big round of applause for Indivisible Bellingham, which really without their help, this event wouldn't be possible. They helped book the space. Kevin especially, they did tons of advertising for it. So please, everyone, just give a big round of applause. With that, I want to introduce our first speaker, which is Senator Liz Lovelett, Senator of the 40th District. So Senator Lovelett represents the 40th District in North Puget Sound, including San Juan and portions of Whatcom and Skagit counties. She was appointed to the Senate in 2019, won special election that fall, and was reelected in 2020 and then recently in 2024. As fifth generation and Cordes resident, Liz is rooted and invested in the 40th District. She is known throughout the region as a champion for our environment, housing, water management, refinery safety, and for looking for solutions for common issues that improve people's lives and repair past harms. So thank you, Senator Liz Lovelett.
Yes, I love to see so many familiar faces and so many new faces here in support of public banking. Maybe you're here because you want to know more about what that is. Maybe you're here because this is old hat and you're like, why haven't we done this already? So a little bit of background to give you some context for why I'm here tonight. I have been Team State Bank since the moment I got to the legislature. And now I serve as the Deputy Majority Leader for the Senate Democrats, and I also coordinate the Climate Commitment Act budget. That's really important to the conversation that we're having tonight because through our capital investments in the Climate Commitment Act, we were able to stand up a green bank in Washington State. This is a huge step forward because the reality is infrastructure, whether we're talking about the roads that people were stuck in traffic on to get up here today, whether we're talking about the housing that we know we need to build to accommodate the growth that we're anticipating, all of these things lead to better quality of life for people in Washington State. And this happens in a multitude of ways. One, infrastructure jobs are really good jobs, right? They are putting people to work, creating all of the amenities around us that make our communities clean and safe and nice to live in. Second, I think infrastructure is the single most powerful investment we can make in solving for climate change. You know, we know some things in Whatcom County. One of them is that water scarcity is a thing that we are staring down the barrel at. I'm seeing this where I am in Skagit as well. So we know that the infrastructure that is going to be required to make sure that we have clean, quality water in our communities is essential to the way we manage our housing and our growth. Transportation. I love that these guys finally got to experience my Olympia commute. I am doing this, weekend over weekend during session, trying to figure out how to navigate the kind of hellscape that is I-5. But just imagine if we had high-speed rail instead, right? So expanded transit service, all those things we know we need. And lastly, because infrastructure and the reality of maintaining that infrastructure is the gift that keeps on giving. You got a pothole in front of your house, you fill it, guess what? Another year later, you got another pothole in front of your house. I work a lot on ferries. You build a boat, guess what? You wait a couple of decades and you're gonna need a new boat. So the reality is that infrastructure is a forever obligation. And right now we're in a place where our federal government has turned its back on the American people and the needs that we have in our communities. Why is that relevant to state banking? Well, we here in Washington State have been experiencing a record budget deficit. Is it because of irrational spending? No, it's because we've been trying to provide basic needs for people in a state that is growing rapidly. For all the deficit hawks that have been out there talking about how we've just run ourselves into the ground, we've almost doubled in size in the last 30 years in population. That means more schools, that means more lanes on the highway, that means more expanded infrastructure for housing, and all of that costs money. So when a state bank comes in and can alleviate some of that pressure for municipal governments, for county governments, for state governments, that means that we have additional resources available to invest in the social programs we know provide the safety net that we need in our communities. I mean, last year we had to fight over food security, making sure that our food banks still had food at the counters when people were hungry. And when you go abroad and you see the hellscape of democratic socialism, where, you know, they have free healthcare and university and public housing, and you realize, my God, what are we doing here? We're the richest nation in the world, and we can't manage to provide the most basic services for our people. And at the same time, we have these infrastructure challenges. My start into politics, I was a city council member, and we were in a position where we had an incredibly aging water system that was very difficult to capitalize, and we had ourselves looking to the Public Works Assistance account and to all these other places to try to raise the revenue that was necessary to update the conveyance equipment, the storage equipment that was needed to get drinkable water into people's homes. And the last thing that we want is to have infrastructure that is so top heavy on the way that we finance it that people are paying through the nose to be able to turn on the tap and drink water. I mean, especially as we look forward to the realities of climate change, these are things that people are just not going to be able to stomach, and there's not going to be anywhere for them to go. We have some of the most abundant water supply in the United States. And yet we find ourselves in these situations where how many of you got a curtailment notice of please don't water your lawns? Please make sure that you're saving as much water as possible. And that is only going to get worse, folks. And so the more that we can find alternative pathways to financing, not the nice to have, but the need to have. And that doesn't begin to touch on things like what I experienced out on San Juan Island, where we had a Class A water system out on San Juan Island that got one of the highest levels of PFAS contamination in the state. It was because, as far as we know, a volunteer fire department discharged some of the foam uphill from the water supply, right? This was a totally honest mistake. Nobody knew what they were doing at the time, but those forever chemicals are going to stay in the ground and stay in that water supply, just as the name would imply, forever. There is never going to be a horizon where we don't need to pay for infrastructure. One of the things that I really love about WA Builds, which I just was assigned to the board of, and I'm very excited to start on that endeavor, is that they're also working on microfinancing. So the idea that they can buy up a bundle of loans and make it so that everyday people can invest in the envelope of their homes. Think windows, ducting, insulation. Why does that matter? Well, the better and more resilient our homes are, the less electricity we're going to consume. So anytime we're investing in infrastructure, not only is it just, ricocheting money around our communities, but it's also lowering everybody else's bottom line. So this year we made a few really big strides. Washington Builds, as I've already been talking about, and you can get on wabuilds.org and learn all about that. We also did the proviso that Marco's participating in that is going to be for figuring out a pathway to a state bank, which we've tried many times, but it's a Sisyphean feet to roll that rock up the hill. And then the third one is something I've been working on for several years, which was running a proviso for the treasurer's office. So the state treasurer already manages a number of loan accounts. He also manages the local government investment pool. So this is where all of the municipal and county governments put their monies together, their kind of more liquid assets, and make sure that they're generating some revenue off of that in order to help their bottom lines. Why not put all of that together so that we now have a revenue generating source that's going into a revolving loan to figure out how to get more infrastructure projects on the ground? One of the things that I have learned through the last years, working very closely with the Public Works Assistance Account, the Public Works Board, is that they are 100% subscribed to their program 100% of the time. What that means is that, say you need a water tank replaced, or say you have a major culvert project in your area that's going to make it so that the water can finally convey. Those are projects that they want to get investment in, and they're competing against each other for those resources. And that doesn't begin to touch on the things like broadband, which the Public Works Assistance Account has finally gotten into. You know, the way that they do the mapping for broadband from the federal perspective is that if you have one person that has fiber internet in any given area, the whole area is serviced by fiber. But I think any of you that are coming in from Linden or Blaine or any of the other places around here, you know that just because your neighbor a mile away has fiber service doesn't mean that that's going to be affordable for you to receive. Some of those places in San Juan Islands are paying $10,000 to $15,000 just to have it come to their home. And in a constantly digitizing society and economy where people need to be able to have that connectivity, whether it's for their kids for school, whether it's for telehealth, for medical appointments so that they don't have to be driving on the road, or whether it's just because their job allows it, we have to have that infrastructure in order to grow our economies and grow our community resiliency. So I'm thrilled to be able to be here tonight and pitch this to you. Like, hats off to Bellingham for supporting this as a city council resolution for all of these years. I'm excited to see how we unroll all of these programs over the next years, and particularly stoked about WA builds because that is something that is happening now. We fought really hard to capitalize it at a level that could be successful because we know that infrastructure solves problems, both the big ones that face our entire communities and the small ones that we face on a household affordability level. So thanks to our co-presenters for being here today, and I welcome you to learn more. Thank you.
Thank you, Senator Lovelett. Now to introduce our headliner for this evening. Don Morgan is a certified public accountant. He received a bachelor's degree in finance and accounting from the University of Wyoming in 2001, and a master's degree in accounting from the University of Phoenix in 2009. Don Morgan's banking career began in 2001 as a credit review analyst. Prior to him taking on the role of Bank of North Dakota's president and chief executive officer on August 1st, 2024, he rose through the ranks of the banking industry, serving as, and he's done multiple things related to banking, serving as a market president, vice president of credit administration, chief credit officer, chief financial officer, and then finally CEO and president of the Bank of North Dakota. So very thanks to have us here, Don Morgan.
All right, thank you and welcome. So glad you guys came out. Sorry for the delayed start. You guys do have serious traffic. Like, as a North Dakota boy coming out here, like, that was eye-opening for me. So if it is for the salmon, I love salmon. I love everything about salmon. So that puts it in good perspective for me. So thank you for that. I want to thank Marco. I want to thank the board of Washingtonians for Public Banking. So I get invited to go around and share the story of what we're doing in North Dakota. I've been to New Mexico, I've been out to Massachusetts, heading to Vermont, now out to Washington. You guys have a beautiful area here. It's my first time in the Northwest, so I've enjoyed every minute of it. I've checked out Snoqualmie Falls and driven. I grew up in the mountains. I'm an old rancher from the Wyoming mountains, and so my soul is still in mountains and trees and spruce trees and pine trees, so I feel like I'm at home here. And everybody's been so welcoming, and I really, really appreciate that. When I get invited to come out and speak, a couple things go through my head. One is, should we go out and speak? Because what we wrestle with is, what necessarily works for North Dakota may not work for New Mexico, may not work for Washington. Each state is very, very, very different, right? I think we all know that. However, what we come down to, and I speak with my board about this quite often, is, we're proud of what we've got done in North Dakota with our public bank over the last 107 years. We believe there's some deep financial concepts here that as other states contemplate maybe creating something in the same universe as what we created, we think there's some concepts and some hard lessons learned and some things that we could share that would help you. And we truly believe that the stronger each of our individual states are, the stronger our union is, the stronger our United States of America is. And so it truly is an honor to be asked, and it's an honor to come out and speak to different states about what we've got going on in North Dakota. Here's my disclaimer, okay? I want to stay behind the line of sharing, here's the best practices that we have from North Dakota. I can give some advice, but I want to open this door and say, take it for what it's worth. Take parts of it that may work for Washington. Leave aside those parts that you don't think are going to work for Washington, because I don't think any one public bank is going to be the same, because each of the states are different. So, and if I cross that line, Marco's pretty good about wave. He's like, no, stop, back up. I've got two passions in life. It's community banking and it's agriculture. I grew up cattle ranching. I'm married to my wife is part owner in the Blackleg Ranch, which is the second largest contiguous ranch in North Dakota. And so I grew up in Wyoming, met a North Dakota gal, and our combined ranches. So ranching and cattle and livestock have been a huge part of my life. We're actually deep into regenerative ranching now, so rotational grazing and cover cropping systems, and starting to really embrace the fact that soil health is where the real answer is for the future for all things in agriculture. Thank you very much. And community banking, my 25, 30-year career in community banking has allowed me to stay hooked with agriculture, because a big part of my community banking career has been tied directly to agriculture. North Dakota, we've got two major industries. It's energy and it's agriculture. We're really, that is what our state is all about. Obviously, we got some tourism and other things, but that's kind of North Dakota. My experience in community, so if you're a community banker in North Dakota for any amount of time, you engage in the symbiotic relationship that is the relationship between all the community banks and credit unions in our state and the Bank of North Dakota. So when I talk about tonight the unique North Dakota banking model that works so well for us, it's not just the Bank of North Dakota. It's Bank of North Dakota plus the 91 community banks and credit unions in our state. And I'm not talking the big boys. We have nothing against the big boys, but they're the big boys, right? Wells, JP, Chase. They just don't need us, and we don't really need them. On some of our disaster programs, Wells may come in and use our disaster programs for a few of their customers, but on a recurring basis, we don't deal with the big boys very much. They're in a different universe. I'm talking about, I think our largest community bank is less than $5 billion in assets in our state that we primarily do business with, and the largest credit union is probably about $3 to $4 billion. Most of the 91 banks and credit unions that are in our unique North Dakota banking model are $150 million, $500 million, $750 million, locally owned, supporting their community. I like to call them your local friendly community banker or credit union representative. So when I speak about the model, that's what I'm speaking about. Okay, to understand why it works in North Dakota, so 107 years, we were formed in 1919. At one point in the nation's history, there were 6 public banks. 5 of them failed out. There's only 1 surviving, Bank of North Dakota. You got to ask yourself why, right? Why? I believe it starts with our foundation and our founding. So if you go back to our founding documents, and I have the actual originals in the safe in my office, and I read them quite often because they're pretty brilliantly put together. What they did at the time is they first formed the Industrial Commission, because somebody 107 years ago realized that if you're going to own a private and run a private complex bank, which is a very complex thing to run, there needs to be some separation between the legislature and that for the operation of it. So this is my board of directors, the Industrial Commission, and it is made up of our governor, our attorney general, and our ag commissioner. These are my bosses, right? Now, I still work closely with our legislature. I still work very closely with our other state agencies. I work closely with all the towns and cities and everything, but when it comes right down to what decision are we going to make for the best of the Bank of North Dakota and thereby the best of the state of North Dakota, these 3 gentlemen, and sometimes ladies, are my bosses, and that's an important distinction. The founding documents also go on to set our mission. Now, this mission is the exact same mission that we are following today. It has survived for 107 years. There's two parts to it. The first part is the simple part. We exist to promote North Dakota agriculture, commerce, and industry. That's why we exist, okay? However, it goes on to say a bit about how we are to fulfill on that. And it goes on to say that we're to promote North Dakota agriculture, commerce, and industry. We're to do it by never competing with our private financial institutions in the state. And not only are we not to compete, but we're to cooperate with, to assist in their development, and coordinate all parts of the health of the financial services of the state. That is why we exist. That is our guiding light. When we're in doubt, we go back to that. And we ask the question again, does it promote North Dakota and her industries? Does it compete, and does it work with and for the health of the financial services? Because when you're talking about banking and the power of banking, you're talking about two things. You're talking about leverage and managing capital flows. And there's real power to those that understand how to manage capital flows. Interest rate buy-downs, revolving loan funds, which I've heard the state of Washington is starting to use. Things like that eases the flow of capital. Wherever the capital flow eases, you get more of that. Wherever it tightens, you get less of that, okay? So our premise is built on that, on the flow of capital throughout the state. So really, most of my time is spent working with 91 financial institutions in many various different ways, kind of managing the flow of capital for the whole of the state. Okay. We were formed in 1919 by a bunch of angry farmers. That was our basis. We had a very contentious forming. So we were a wheat farming state, primarily produced wheat, shipped it on rail out to Minneapolis. And the farmers at the time, back in 1919, they were not getting treated fairly in terms of interest rates. They were getting held over the barrel on high interest rates out of Minneapolis, and on shipping rates. There was shipping monopolies and different things. And so the farmers finally got fed up, and they formed the Nonpartisan League Party in the state of North Dakota. They rose to power. They took over majority in the legislature. They took over the governor's office, and they formed two things. They formed the state Bank of North Dakota, state-owned Bank of North Dakota, and they formed the state mill and elevator up in Grand Forks, North Dakota. And the state mill and elevator is still operating today. It's growing. It's doing very, very, very well. Milling and processing and shipping a lot of grain and commodities for our state. So that's how we got our start. It was not easy. We've been to the Supreme Court in North Dakota 13 times, challenging our very existence, but we've won every single time. And we're thriving today. Here's our storied timeline. So we started out back in 1919 with $2 million in bonds. They were two $1 million bonds. We couldn't get any deposits from the legislature. We started out with small, humble beginnings. But you can see we grew all the way today to 10.6 billion in assets and about 1.2 billion in capital from a very humble beginnings of 2 million. But the cooler part of this story is the timeline. You go back to the Great Depression. We like to say we're the financial Marines of North Dakota. When there's a disaster and everybody else is taking their capital elsewhere, we're running to that disaster in North Dakota. So back in the Great Depression, when farms and ranches were getting foreclosed on, Bank of North Dakota took over those farms and ranches, rented them back to the farmers for $1, and then when those farms and ranches recovered, they sold it back to them at below market value so that they could survive through the generations. It really saved farming and ranching in North Dakota. Also in the Depression, teachers were paid in warrants and rather than cash because there just wasn't cash available. And those teachers had to convert those warrants into cash, and they got charged like a 15 or 18% fee. And Bank of North Dakota at the time worked with the governor's office and just took over those warrants and transferred them for free for the teachers so that the teachers could keep their money and not eat that fee. More recently, we've had floods. We've rebuilt homes in Minot, North Dakota from major floods, in Bismarck, North Dakota. Last year in 2025, we had 5 disaster programs. We had 2 derecho high wind, straight wind storms that destroyed our grain storage. And we worked on grain storage, lending at below market rates for them. Our row crop farmers are really struggling right now. It's the perfect combination that they've never faced before, except for probably the 80s, where you've got sustained inflation, where the input costs are just up high. You've got high interest rates staying higher for longer, and you've got low commodity prices staying lower for longer. It's that perfect trifecta over several operating periods where our farmers and ranchers just can't pay back the working capital and replant for the next season. So we did a record-breaking $500 million disaster loan program for them, working with our 91 financial institutions in 2025. So being there for the state when the state needs us in terms of capital flow is a big part of our mission and who we are. But it's not the only part of our mission, and I'll kind of walk through all of our verticals. To finish out the structure, I mentioned the Industrial Commission, but the state legislature, it also plays a huge role. So the brilliance of the founders in 1919 putting together this structure were really before their time, because this mimics a private corporate governance structure, which really works, right? You've got shareholders of a company who elect an independent board of directors to run the company, because it's never typically a good idea to have your shareholders run the company, right? That typically doesn't work. But if you have an independent board and you give them the job of hiring and firing the CEO and providing oversight, that works pretty well. And so our structure mimics that. So every citizen in North Dakota is a shareholder of the Bank of North Dakota. They are represented by the legislators that they elect. Those legislators are our shareholder representative group, and their concerns are primarily with the profit and return and the dividends that we are going to pay back to them from the operations of the bank. We are a for-profit entity. We deliver a nice profit and return to the general fund each year. We don't spend anything out of the general fund. We're accretive back to the general fund by our operations. But the management is turned over to the Industrial Commission, again, which is the governor, the attorney general, and the ag commissioner, and they're responsible for strategy and oversight. They are in credit decisioning of large amounts, because that's good practice in banking, on capital expenditures, on dividends decisioning and whatnot. Then they're very busy 3 elected officials, right? They don't have time to be full-time legal board members. So they established a 13-person advisory board with experts from the industries in the state. So we've got somebody from construction and energy and agriculture, and 3 from community banks and credit unions in the state. And they are the ones that act and do more of the board duties, right? And they do a lot of recommending to the 3 elected officials so that the 3 elected officials can make better decisions on less information. And of course, at the end of the day, these are my bosses, represented and recommended by these. And then of course, executive management I oversee. I spend a lot of time on structure and governance structure because I attribute this as to why we are the only surviving public bank in the nation. It is because of our governance structure. I've talked to prior CEOs. Senator John Hoeven at the national level was the CEO of Bank of North Dakota. I've spoken with him. I've spoken with others of my predecessors, and we all agree. Without this structure, we think Bank of North Dakota would have failed some time ago, like the other public banks. It would have got too political. One of the big things this allows us to do is stay apolitical. The bank is operated under Republican, under Democrat, under Independent. We don't care at the bank. We exist to fulfill on our mission to promote North Dakota agriculture, commerce, and industry. We'll work with all of the parties, and we will move forward to facilitate capital flows for the state that are strategically important to the state, at the direction of our board of directors in working with the legislative group. It's not a perfect system, but it's a system that works in North Dakota for us. We are overseen, we have checks and balances. We are not federally regulated because we don't offer deposits out to the public. We don't provide FDIC insurance. We do provide access to we have a master Fed account. We provide correspondent services. So we talk with the Federal Reserve quite often, but we are technically regulated by our state Department of Financial Institutions. They do an annual safety and soundness exam. And then we have I. Bailey, who is our audited financial statement auditor on an annual basis. Okay, here's the meat and potatoes of who we are. This third one in the middle, participation lending, this is the trunk of our tree. This is what makes a bank a bank. This is what makes our North Dakota Public Bank our North Dakota Public Bank. Let me state that more clearly. This is the primary partnership with 91 community banks and credit unions in the state. Here's how it works. And it could be a business deal, could be an agricultural deal, could be in the energy, could be construction, could be development, could be whatever that community bank and credit union is doing in our state. we kind of follow their lead. So they might originate a $500,000 loan to a plant business down the street owned by a married couple. And for whatever reason, and the market rate's at 6% for them, okay? For whatever reason, that bank does not want to do the full $500,000 on their own. Now, the relationship between them and the borrower, the plant business owner group, will stay the same. That doesn't change. But on the back end, that bank may sell us half of that loan. And on average, we participate half of the loans in the state with our community banks and our credit unions. Our rate that we'll take will be 575. So we'll leave that lead bank with 25 basis points so that they get paid for continuing to lead the relationship, and yet we're helping that community bank or that credit union provide that capital. So you see, we're easing the flow of capital through the community banking industry. That's the primary thing that we do. Now, the sky's the limit on why our community banks and credit unions want to participate with us. It could be that the individual loan is too big for them. It could be that there's just enough risk that they're underwriting that they're just not comfortable taking it on their own. And if they have a partner like BND with a second set of eyes on it, that's where they might get comfortable, where we share in that. They could be managing their own balance sheet. You know, every bank has to manage liquidity and credit risk and return to their shareholders. And so it might be part of more of a macro strategies with those community banks and credit unions. What I'm kind of getting to in this participation vertical and with our structure and everything is our entire existence at the Bank of North Dakota is based on this deep concept. Behind strong communities, you'll find strong locally owned community banks and credit unions. Our flow of capital works through those community banks and credit unions. And if we ease that, we see that result in stronger communities because you're easing the primary source of capital to communities, which is community banking. That's our premise. That's what we operate on for the most part. That is the trunk of our tree. That is where we make our money. We don't make money based on almost any of these other verticals except this one right here. This one has to pay for the rest of them, and it does. It does. So how do I fund that? I don't go out and take deposits from the public because that would be competing with my community banks and credit unions, right? I don't want to do that. I want them to have the liquidity where they can lend to their communities. But our state is blessed to sit on about $6 billion of operating funds that we operate on in our general fund and our special funds, right? The state has more funds than that, some invested in what we call the legacy fund and other long-term investment funds. But our state's operating accounts are about $6 billion on average. In banking, you have the power of leverage. So I can take that $6 billion and I can leverage it 1.5 times into a nicely well-balanced, risk-diversified earning balance sheet as a strong banker's bank plus, and I can make money on that. I don't have to go out and get deposits from elsewhere. It's a bit of a tricky widget to manage, but it can be done and it can be managed in that way. That funds this so that I can make my profit, so that I can return some profit to the legislative group who requires it. But then that also provides the money where I can buy down interest rates on disasters, and I can buy down interest rates on submission-based loans, and I can do some education and fintech for my banks. So that's how our verticals work. Our disasters I talked about, nearly every single disaster program are below market rates. So our farm financial stability program, we just did $500 million on. Market rates in agriculture today are about 6.5%, 7%. We're able to, through working with our community banks and credit unions, by blending out the participation on the disaster consolidation loans, we're able to get their rates down to about 4.1 overall on $500 million of capital out to the state. It's not a huge amount, but it really, really helps. And these operators are giving us feedback that, hey, we now see a way that we can get by and survive until commodity prices come back. So that's what we do. Flood in Minot, we had about 50 million in homes that got destroyed, and there was, insurance and federal and private and all these things helping out, but there was about $30,000 and $50,000 gaps where these people couldn't rebuild their homes in a quick order because they were short that amount. We did quick, again, through our community banks and credit unions, we did quick $30,000 and $50,000 unsecured loans. I think we're at 3% on those. And we kind of hoped to God they'd pay us back because they were completely unsecured. So we got the people, they built their homes. Honestly, what we found is they were so thankful that we stepped in to allow them to build their homes quickly. We just got, that was 7 years ago, we just got paid back on our last amount. We lost zero on that program. So that's the type of things that we do in these disasters, is we look for the gaps that are not being met by somebody else, and we say, how can we fill that financial gap or fill that credit gap or that capital flow gap? Student loans. This is the only vertical that we offer direct to the public. And the only reason we do it, there's two reasons. One, the student loan market as a nation is a complete disaster. I think we all know that, and has been. And two, none of our community banks and credit unions want to play in this space. If they did, I would gladly partner with them and let them lead the way to do it, right? It's a very difficult vertical to be in. But what we said about, I don't remember when, 15 years ago, I don't remember when it all changed. Time kind of collapses on me and it all runs together. I guess I'm getting older. But some time ago, I believe it was, we looked at what was going on in the student loan market. We looked at the fact that none of our banks and unions wanted to get into the space. But we said, you know what, our North Dakota kids are not able to get good student loans to help them through their secondary education. So what we do today is, if you're a North Dakota kid, North Dakota resident, grew up in North Dakota, wherever you go, you can come out here to Washington, you can go overseas. We will follow you and provide your student loans all the way through consolidation, hopefully get you a payment you can afford, work with you when you get into the workforce. Or if you're somebody coming into North Dakota to go to one of our universities, we'll fund those student loans as well. These are truly mission-based for us. We're a little bit below market rate, but not much. This is a very difficult business to be in, but it's truly mission-based. I explain all that to say this. At the end of the day, we are a banker's bank. We stay behind the scenes. We never get in front of our lead banks because we don't want to get in front of them. We want them to lead the way. They are the ones that have relationships with you, the business owners, the individuals, the agricultural operators. We stay behind the scenes as a good banker's bank should, but there's a plus next to us. And that plus is mission-based disaster loans, mission-based student lending, other mission-based things that I'll talk about here in a little bit, where we buy down rates if businesses create more jobs. We buy down rates for all types of different things that are strategically important to the state. Then we have our legislatively directed programs. These are ones that are not on our balance sheet. So remember I mentioned we're $10.6 billion in assets, $1.2 billion in capital. We have another $1.3 billion that is directly instituted by our legislature. They're essentially most, if not all, of the revolving loan funds of the state. We manage those in one area for the whole of the state. Which works pretty well because we're pretty good at making loans. Bankers are, we're not good at much, but we're pretty good at making loans and recovering those loans. And so that $1.2 billion, a lot of that is building schools. A lot of it is municipal infrastructure. A lot of it is water infrastructure. We've got Clean Sustainable Energy Authority. We've got our PACE program. Here's how it works. So the legislature on school construction a while ago said we're going to one-time fund it $500 million. Bank, you manage it. Build schools for no more than a 2% interest rate, manage them through construction, help them get to permanent bonding, and then when they gets paid, that construction loan gets paid off, that opens up the original $500 million again, and you take a new applicant, you build a new school. We've been revolving that thing successfully for going over, I think, a decade and a half now. Same thing with infrastructure, same thing with water and all the various different revolving loan funds. Our PACE program is probably our most successful program in here. That's where in our normal participation pool, if a loan comes through for a business or an agricultural operator or somebody like that, and the biggest characteristics is if you're creating jobs. In North Dakota, we always need jobs. We've got more cattle than people in North Dakota, so we always need people to fill jobs. So if you're creating jobs and filling them, we'll buy down your interest rate. On the PACE program, though, it's interesting, and we found huge success with this, where it's a combination of the local municipality, where the business is headquartered, right? The state, and then the Bank of North Dakota through some of our dividends. And that tri-party arrangement on our PACE buy-down, I think has made it one of our most successful buy-down programs because it makes them all put a little bit of skin in the game. And so that's been very, very successful for us. We have it for agricultural as well. What we're working on now, and I'm hoping to roll out January 1st, we've been doing interest rate buy downs on agricultural PACE loans for things like irrigation pivots, drain tiling, things like that, kind of back in the commercialization of agriculture. What we're working on to add is interest rate buy downs for those operations who are transitioning to more regenerative practices. We're hoping to roll that out January 1st. So I'm pretty excited about that because I really am a believer that that's really the future of agriculture. So thank you. And finally, fintech. Fintech is a threat coming into, it's also an opportunity, but it's a threat coming into community banks and credit unions. And its main threat is it's getting better at providing deposit services in here where all of us want it than the community banks are. So when we're involved in fintech, we're looking at, again, back to our mission. We exist to promote North Dakota agriculture, commerce, and industry, but we're to do it by the financial health of the financial services of the state. Well, if that's under threat, then we need to help it out. And so we're helping out in two ways. We're doing education series for our community banks and credit unions on a recurring basis to help them learn about this fintech and so that they can go back and have a better strategic conversation. And also we're standing up Rough Rider coin. So the Genius Act came out, bipartisan in Washington. What gets passed bipartisan in Washington these days? Nothing, right? It did. We truly believe on a global basis that the movement of money is going to change. Money has been moving on old payment rails for some time. ACH, wires, checks, right? Slow, clunky, expensive. It is moving to more stablecoin payment rails. We are specifically building Rough Rider coin to be a new blockchain-enabled digital payment rail specifically for community banking so that community banking can move money quicker, faster, cheaper, more secure, and get better about moving your money in here so that the community banks can compete better and be more relevant in here to maintain your deposit business. So again, it's a way that we're trying to help out in a new vertical, the health and resiliency of our financial services industry in the state of North Dakota. So we're not just about lending. Okay, we're not just about the legislative directed programs. We're also there to exist and get creative if we see a threat coming to the model itself. So those are our verticals. That's the meat and potatoes of really kind of how we operate. And that has led to about $5 billion out in our portfolio in commercial and ag loans. And actually, because we're running at a 50% participation rate with 91 community banks and credit unions, you can double that. So it's $6 billion in deposits that we're borrowing from the state in order to engage in the magical leverage of banking on and run this publicly owned state bank. Because we're averaging 50, so we're really putting out $10 billion in capital to the state. That you could argue that capital would otherwise not flow through our state to businesses, to agricultural, to communities, to all nonprofits, to all the things, right? Because without us, you'd have to say, well, would the community bank and the credit union do it on their own? The fact they're participating in us tells you they would not. So there's kind of proof in the pudding that we are helping to facilitate the flow of capital in our state, which helps facilitate the flow of the strategic items that the state wants to accomplish. We got about $1 billion in student loans, about 400 to 500 million per year on 10 billion in assets is what we turn back in profit and dividends to the state general fund. So we run on a biennium with our legislature. So we like to say we're close to $1 billion a biennium in profit back that then the legislature can use for whatever they determine they want to use it for, right? That's the for-profit part of us. We've done hundreds of millions in disaster hundreds and hundreds of millions in disaster programs, 1.2 billion legislative, and just give you an idea of the churn. So just on a $5 billion commercial ag portfolio, we are originating and renewing and modifying about $2 billion per year. That's just busy work for us. I've got 200 staff. We run very, very efficient. Another leverage point is there's no way I could get all of this done with 200 staff. Most $10 billion business banks out there, bankers banks out there, are running with 500 or 600 staff. How are we running with 200? Well, with the model we have and the partnership with those 91 community banks and credit unions, so see a lot of their staff are our staff and vice versa. It's such a symbiotic partnership, which is kind of where I started my presentation. If you take one thing away from my presentation, as you contemplate a public bank, my best recommendation is realize that the power of relationships amongst these entities. And if you can figure that out, all of a sudden you got something really, really, really powerful for your state, like we've found. So I said that we're based on the premise of behind strong communities are strong community banks. Then what's the data show after 107 years? North Dakota does boast the highest community bank branches per capita in the nation. South Dakota is a close second to us. Nebraska's third. We're very proud of that. That tells me that our model is keeping our community banks and credit unions healthier, which again, we believe then keeps our communities healthier. Now, we're not perfect. The model isn't perfect. Our communities aren't perfect. We have our problems, right? For sure. But when I look at this, I say to myself, our problems could be much bigger if we didn't have this model. And I'm convinced of that for our state. We, of course, provide bank services too, the correspondent services. I'm not going to bore you with all the banking jargon, but this is an important part, especially for smaller community banks and credit unions. We help them access the Fed. We help them with bond safekeeping. We help them with correspondent payments. We help them with ACHs and wires. It's not just a transactional relationship we have with them. It's also an education and a partnering relationship that we have. We're looked at as the kind of apolitical financial advisors of the state. We're looked at as a more sophisticated, knowledgeable group to come to for the most complex banking and credit union topics. And we find that with our partner banks and unions, they come to us for a lot of that. So it's truly overall a symbiotic partnership and relationship. Okay. All right, I'm going to share with you, and I'm getting to my end here, our actual strategic plan, because I think it's important to understand, because what you'll run into with the structure as you contemplate this is, well, how do you run a private, complex, bankers bank plus public bank that needs to operate like a private bank? Because banking is very powerful. Banking can also be very dangerous. You need good bankers to run your bank. They need to be risk managers. They need to be liquidity providers. They need to be thoughtful and experienced. And they also need the space in order to run it without it being run like a political entity. If I was run as a political entity, I guarantee you Bank of North Dakota would fail. Because all of a sudden I would start messing with my balance sheet metrics and my liquidity contingency funding plan, and I'd be pushed to do too much over here and too much over there. I have to have the space, and I started with structure to say, how do I get that space? I have the Industrial Commission that provides me that space where I can operate. Now, I am still owned by the state, right? At the end of the day, my board makes the final decision. But having that space to operate as much as humanly possible like a private bank is very, very, very important, and I attribute it to our success. So our strategic plan, we hire and fire all of our staff based on these core values. To work for the Bank of North Dakota, you have to be North Dakota proud. You absolutely do. We can't pay as much as the private market. Somebody can go to a private bank of our size and make time and a half again what they're going to make. That's part of the balance between a private entity and yet being owned by the state. We can only pay so much. But we find a lot coming in because they are North Dakota proud and they are passionate about our mission and they want to engage in creative solutions and they like the idea of being the financial marine running to the fire and not running away from it. And of course, we hire those with integrity and purpose. These are very serious for us. We live by these every single day. This is the type of organization that we are. This is the type of organization that I can look every legislature in the eye and say, this is how I'm running the organization because it's important that we run this way. Because it's important, Mr. Legislature, that you know that your deposits are protected, that I'm making money on them, that I'm fulfilling the strategies of the state, that I'm staying apolitical, that I'm always being a good financial advisor, that I'm always trying to be the wise person in the room. I have to look my legislators in the eye and my governor and my attorney general and my ag commissioner every single day and be able to answer that question to them. Here's our mission. And we stack it out just a little bit more with clarity. And this is very, very important, that first one. Our first and foremost job at the Bank of North Dakota is not to make money. It is to be a risk manager. We are borrowing the general fund and the strategic investment fund of our state, the operational funds, right? They could put them at JP Morgan or Wells. A lot of states have them out there. JP Morgans and Wells have to protect those deposits, right? They have to operate in a way that you maintain trust and confidence that those deposits are going to be there when you need them. I, as the state-owned bank, have to do the exact same thing. I have to make sure that the legislature, and by extension, all the citizenry, have trust that those deposits are safe while I put them into assets that carry risk. That's how I make my money, right? I put them into loans, I put them into securities. So first and foremost, we're risk managers. Second, we're liquidity providers. Now, what am I talking about there? Every single state goes through deficits and surplus, and I'm very sorry to hear your state's going through a deficit. I know it cycles, and everybody I met, I am convinced you guys will get through this. You'll be back to a surplus before you know it. I'm convinced of that. A lot of great people out here. But it goes through cycles. So I have to stay prepared that if the state needs money, additional money from the bank, that I have enough in liquid securities and other liquid sources so that I can be there to keep the money flowing. In 2015, 2016, oil went negative, stayed there for a year and a half, 2 years. Not negative for that long, but they stayed low. Really hurt North Dakota. We went through a deep budget deficit. In our $4 billion securities portfolio, I think we quietly sold off about $3 billion of it. We didn't really tell anybody. We just did that so that the money would be there to cover the deficits that were in place until the state could recover. Most states that go through that without a public bank, you see them having to borrow, right? You have to borrow funds. North Dakota didn't have to borrow because we have that public bank sitting there with that nice, strong balance sheet. But it's only strong because we're first and foremost risk managers and we're liquidity providers. Then we're a growth catalyst for the state, and I've talked about that. And then and only then, I generate a nice, healthy 4.5%, 5% return net profit to the state. So profit's important, but it's not the most important thing, is what I'm trying to say in our mission stack. We want to grow to be $14 billion in assets, and we essentially want to be North Dakota's bank, meaning North Dakota's needs. Our three uniques: we are mission driven. We truly believe there's only one of us, so these things are unique. We put North Dakota first all the time. We have that stable legacy of 106 years of just proving that how this works for us. And we are first responders. We are the financial Marines for North Dakota. We run to the fire. We don't run away from it. The other thing that we have, and this is, I think this just kind of happened over 107 years. It happened because, I believe, of our structure. It happened because of our history and the challenges and the survivorship. It happened because it's been blessed to be run by 15 CEOs who were good bankers, hired to run a good bank, who knew how important it was to stay apolitical, to stay out of the fight, and stay just adhered to your mission. What has built is we have the ability now where we cut through the state silos. Every state has silos, right? Everybody's kind of doing their own thing. I could share with you many examples here where we've cut through, we've brought in commerce, we've brought in the governor's office, the attorney general's office, the appropriations group in the legislature, local city councils, the mayor, the local economic development agency, the local lead banks, and we quarterback a deal. Might be a data center. It might be a potato plant that we won against Wisconsin up in Grand Forks, value-added agriculture. Might be whatever is strategically important to the state. We find our ability to kind of quarterback that deal and put that capital stack together. So our proven process is we identify, we ideate, but the last one's really important. We can initiate the entire strength of the state. And that's a really powerful thing. And I think that's built on our years and our history and our relationships and our reputation that has been built. So that's probably the most powerful thing that we have. If the state needs us, we can cut through it all. We can put it together into something that's consumable, right? So in 4 years, we're engaging in strong banking, strong relationships, focusing on talent management, engaging in fintech to help our financial services industry. And we're all about mission, 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 mission. All right, I'm going to finish with this. What works for Bank of North Dakota? In order, our 91 financial institution partnerships, that works. Without that, guys, Bank of North Dakota, we wouldn't be able to do anything. We wouldn't be able to do disaster programs. We don't have the resources to do it. That partnership really works. The Industrial Commission as my board of directors really, really works well. The CEO history, like I said, there's been 15, and they've really made sure to hire good bankers to run their bank. And I can't stress the importance of that. Banking is a complex beast. You're talking interest rate risk management, liquidity contingency funding, asset management, cybersecurity risk, credit risk, Concentration risk. You're talking very, very complex. And I don't want to overstate that, but it's very, very true. So I urge you to contemplate making sure a good banker runs your bank. We never compete. We have our mission-based activities, and we have our proven process, which is our real magic sauce. That's what works for us. That's what we built over 107 years. What doesn't? We are still part, to a certain extent, of the state bureaucracy. It's very difficult to move some things at the speed the state wants to move, slow. You got to work through procurement or OMB and different policies and whatnot. Are we a part of it? Are we not? That can hinder our ability to manage the bank. So we do fight that on an ongoing basis, but it's just something that we deal with. We're sometimes viewed operationally as a state agency. A lot of my legislators, I spend a lot of time talking to them. They kind of misconstrue that we're just another agency and they appropriate to us and we move the funds how they say to appropriate. So I do a lot of this, explaining, no, we're much different. We don't spend any of your money. We borrow your deposits instead. Think of us like a very friendly Wells Fargo that's not quite so big. That's how you need to think of us, that are doing really, really good things over here, right? That's probably not the best example, but I use it because what I'm trying to share is being a bank is much different than being an agency. And there's nothing against agencies. There's a purpose for commerce. There's a purpose for the treasurer. There's a purpose for health and human services. They have very important purposes. But the purpose of a bank and the structure of a bank is very, very, very different. And our captive deposit base is a blessing and a curse. That's back to that cycle. So I have to stay prepared for a $2 to $3 billion budget deficit at the drop of a hat. And I have to keep our balance sheet, which then hinders my ability to make more money because I'm staying a little safer because I've got cycles that I've got to be concerned with. So, but it's just part of it overall. All right, the power of owning a public bank. First one's leverage, 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 leverage. Banking is all about leverage. So you give me capital, I can leverage that 10 times into earning assets, manage it, and generate you a profit. You give me deposits, I can leverage those about 1.5 times, put them into assets, mix of securities and loans, and I can make you a profit. As a public bank with 91 existing relationships, I can also leverage that twice again to the state. Now that doesn't mean your profit's going to be twice, but to the state's benefit, there's going to be that much more capital flow out to the state. Interest rate buy downs, there's incredible leverage with interest rate buy downs. Give me $1 million and I can buy down the interest rate by 1% on $100 million. Now, that doesn't seem like a lot, million on 100 million, but if they can ease the flow of that 100 million of capital throughout the state, right? All of a sudden that becomes very, very powerful. So interest rate buy downs are very, very powerful. As a bank, I can access the longer term or the longer end of the rate curve. See, when you deposit your money in a bank, might be Wells, might be your local, they're keeping you on the short end of the curve. As bankers, we keep you on the short end of the curve, which is more affected by the Federal Reserve, more volatile, typically lower than the longer end of the curve, right? We then take your money and we invest it on the long end of the curve, and that's where we make our money, is in that difference. That's how banking works. As a public bank, if we're all owning it, then the money that we have, rather than dumping it into one of the big boys and then making their money, you can hold it and all of a sudden you can make money because you own the bank where your deposits are sitting. That's the whole idea. We can break through state silos. Once it's up and running, you can scale it. And the last piece, and I forgot to mention this, in addition to everything else, we also provide lines of credit to our legislative group. And this can be really powerful as well, especially as they're appropriating money, say, for infrastructure. I have a really good example. Last session, our legislature wanted to build a new mental health hospital in Jamestown, North Dakota. And they were going to just bond it right away and take all the money and then build it over time. But they're going to pay interest on that full principal amount from day one, and they're going to have all the bonding fees. So we said, hold on, you own a bank, so let's just give you a line of credit. We'll manage you through the construction process. You'll only draw what you need to pay the contractors as you go. When you get to final completion, we'll help you go into the private market and bond this, but you'll save all that money along the way. So my point is, we provide another financial tool to the legislature to use as they're trying to manage their timing of cash flows. Because the poor legislators, they're hit up for money all the time, right? And they're always trying to manage that timing. So we provide them another financial toolkit to help manage that timing. And finally, my last slide. I get asked this a lot, so I just put it on the slide. Don, what would you do if you were asked to start Bank of North Dakota today? If it didn't exist, what would you do? Here's what I would do. I'd start small, and I'd get a group of financial institutions in the state of North Dakota together, and I'd start sharing with them the power of a state bank and how it could benefit them, us, the entirety of our state. Here's where it could go. And I'd start working with the legislature and the Attorney General on legal and governance model to get that in our Constitution and get that settled with a really good governance model that mimics the private model, right? Shareholders, board, management. Then I would start that pilot group with partners with that one vertical in participation loans. And I'd just get that started. Let me build that infrastructure. Let me put in the loan systems. Let me get some loans under my belt. Let me get the community banks and credit union loans under their belt. Let us get some wins and some successes. Let me get up to a break even. Give me a few years to do that. I don't need much. I just need a little bit of money to go do that. Once I've got that base infrastructure in place, then I'm going to need some serious deposits. Give me some deposits that I can now scale this thing. So I get the deposit funding, hopefully from the general fund or wherever I can find it in the state that does not compete with my community banks and credit unions. And then we scale it. And then once we're up running, profitable, all's in place, then we can start doing disaster loans. We can start doing some affordable housing things. We can start doing some interest rate buy downs. We can start doing some of these things. That's how I would do it in North Dakota. That's how I would rebuild Bank of North Dakota today if she didn't exist for the last 107 years. So hopefully that's helpful. I know it's a lot of information. It's really complex. I wish you guys all the best in the world. And again, thank you for having me.
Thanks, Don, and thanks everybody for coming. My name is Micah Sherman. I'm the president of the board of the Washingtonians for Public Banking, and I'm just going to take a minute to talk about our organization before the Q&A. So we started several years ago, and as Marco said earlier, there's a work group happening this year in the legislature, funded by the legislature, that Marco and 3 other recommendations from our group are participating in. And we're also starting to do quite a bit of legislative work in order to get legislators prepared, to get model legislation drafted that would start to lay out some of the things that Don has described tonight. And with the opportunity that the work group provides, our organization, in our opinion, has a tremendous amount of work to do over the next several years. Even in the quickest timeline, something like this would take many years to even get off the ground. And so an organization like ours, or preferably our organization, is the one that's going to be here to be able to do that work over the next several years, work with existing groups that are interested in affordable housing, that are interested in a more stable foundation for small businesses to be able to get loans, to get our deposits out of the large banks, all of the great reasons that we need a public bank. We're looking to be here to be partners with organizations that are working on all of those different verticals, as Don describes it. I think that's a good term. And so all those places where the bank could be useful to us are where we're looking to do work. And of course, we need to always raise money to do that so we can afford to continue to have Marco out doing all this work, creating all of the great content that I think has made a big difference in moving the conversation forward at the legislature and finally getting a significant investment from them into understanding the state bank. So on the back of your pamphlet, there's a QR code to our website, and we encourage you guys to set up a monthly donation or a one-time donation, whatever you can afford. And then also please keep us in mind for any organizational giving that you're aware of that would be able to contribute to this effort, because like I said, we have many years of work ahead of us. And so we've got a bit of time left for some questions. Since we don't have a microphone to manage, we can, I'll let Don kind of facilitate the Q&A, but if you just want to raise your hand and ask a question.
Yeah, questions, yes.
So you mentioned that you got to the Supreme Court 13 times. Who initiates that? I mean, in other words, who's the opposition that we would face with this kind of initiative?
Well, you're asking me to go back in history here. I'll tell, what I can tell you is this, the opposition I face today, because even today, there's opposition to Bank of North Dakota, in the state of North Dakota. What I've most recently run into is this argument. We could make more money if the deposits weren't at the bank, if they were somewhere else. And that has come up recently because of the inversion of the rate curve. Checking account rates were 0 for a decade, and all of a sudden you get 4% on a checking account. But remember, that's on the short end of the curve. So you might move your money and get 4, but as soon as rates come down, they're moving you back down. You did not lock anything in. And so what my argument has been is, yes, those deposits, you can maybe go make 4%, the same thing I'm making, a little bit less, but it's going to be short end. I'm locking in 5% returns on 5-year and 10-year horizons, right? I'm making that money sustained over a decade. And others are saying, well, we could put it in our legacy fund and invest it in equities and make 8 or 9%. And my response is, yes, but that's a different mission. That's the state's retirement account. I'm the growth catalyst. I'm the capital flow guy. Plus, there's a whole question of liquidity. If you get comfortable that you don't need the liquidity in your checking account as a state, it's just always going to be there, I think you're lying to yourself. Because history would say it's not always there. So what happens if it goes down? If you're invested in equities, try to sell those. If the market has moved against you, you're taking a huge loss. Okay, I don't carry that risk because of my balance sheet, because it's a bank. I can be there as a liquidity source. So that's the debate right now, is that the bank is not making enough money. And there's other places to make more money. And I just entirely disagree with that. And I think it's a lack of understanding of mission and the mission differences. In the history, I think early on, I mean, there was a big fight over the idea, you know, it's kind of a socialist idea. And so there's that fight. And then, you know, we haven't been perfect. We've had a history. There's been a little bit of fraud scattered in with some of the senior leadership in years past. And we had to work through that, you know, public reputation problem. I encourage you to go to our website, bnd.nd.gov. It's got out there the 107-year story. You can go through. It's got pictures and nice narrative. It kind of tells the story, the good, the bad, and the ugly of our history. So I encourage you to go read it. Can provide you more detail. Yes.
My name is Atul. I'm a commissioner with a local PUD. And 2Ds are created by a similar coalition by Rangers and Socialists. And so I kind of see the origin of the state bank being somewhat similar. What I care most about is access. And so specifically as it relates to access, what can you say about access to capital, the kind of democratization of access to capital that a state bank creates as opposed to not having a state bank?
I think I'm a believer. You can believe this or not, but I'm a believer if you've got healthy community banks and credit unions in your communities, they are the best provider of capital to small business and individuals. They're just the best at it because they're the ones that are part of the community. They're at the chili cook-offs or the salmon bakes. I don't know what you have out here. We have chili cook-offs. So they're supporting the Little League team. They're sponsoring the school scoreboard. You know, they're involved in the community, and they're the ones providing most of the loans to businesses and individuals and agricultural operations and whatnot. So I believe if they're healthier and more willing to lend, if they feel safer, if they feel more comfortable, and if they can feel more comfortable because they've got a good partner in the Bank of North Dakota, which I think is proven, then all of a sudden the access to capital just improved for all those people and all those businesses and all those operators in those communities. It's not a full-on answer of, you know, we exist to improve the access to capital, but it is the premise of why I think our infrastructure works. Yeah, good question. Yes.
Participations are common between banks.
Yes.
Why would they choose your bank? And isn't that competition?
So yes, there's a little bit of competition with us and say like Bankers Bank or First Business Bank, those bigger guys that act as bankers banks and buy a lot of participations. We do compete with them. What
Community
we-
banks participate as well.
Yeah, they they participate amongst each other. So the problem with them participating amongst each other is a lot of times they'll steal customers. So you'll get in, and I've been a part of both sides of this, and over time you steal the customer, and so then most community banks and credit unions go, I'm not participating anymore with them. So they'll go to a First Business or a Bankers Bank. The difference with us is we're the only one that is going to be like, so right now a lot of our community banks had agricultural, their whole credit portfolio just deteriorated right out from under them. First Business Bank and Bankers Bank are not going to come in with a disaster program to help heal up their portfolio. We do. So that's a big differentiator. But we tell our banks and unions, if it works for you to go to another to participate, do that. That's fine. That just leaves us more gunpowder for the next deal. So it truly is more of a partnership. And then in addition to that, a lot of the education and the sharing, a lot of our smaller banks, you know, they have to be generalists out there. The president usually has to also be the head of loan operations and the head of cyber and IT. You know, they just can't. So we also provide some education and some help in that area. So it's more than just the loan. That's what it's the plus part of us being a bankers bank. We're a bankers bank plus. Yeah, great question. Yes.
Do you have banks and credit unions that are federally chartered as opposed to state chartered?
We have both.
And if you do, with your community development credit unions, how does the interface work there with promoting the specific development of CDFIs and all of
Are you talking the interface of how the actual loan systems interface?
How's that partnership work?
Yeah, so we're a Fiserv bank, and so to access and participate with us, we essentially convert their data coming in to our Fiserv data. And so all the conversion is on our end so that they don't have to do anything different. They can stay on their own platforms and whatnot. We do that API cross integration. Did I answer? Did I go technical? I thought it was a technical question, but
Well, I mean, you're supporting their mission and the objectives they need to achieve to continue that CDFI status.
right.
They're veterans, they haven't been status.
Yeah, we have those as partners and credit unions and community banks. And yeah, in all ways, we exist to help them be healthier, I guess. Yeah. Yeah. Yes, ma'am.
You do legislative loans for cash flow problems. With out-of-state bank, would they be going to the really big banks to do that, and would that cost them more?
With an out-of-state bank,
Well,
help me.
if you did not have a state bank in
Oh.
North Dakota, would your legislation have to go to really large banks to borrow money, and would that not cost them more than it cost them to borrow from you?
We believe it would, yes. It becomes a nice cycle where if you own the bank and you're also you're the sole depositor of your bank, all of a sudden you're borrowing your own money. And any fees you earned are just paid back to yourself. So it becomes this nice cycle of just keeping your capital within your state and then easing that capital flow throughout the state and then lining it up to the strategies of the state. That's kind of but yes, all along the way, I mean, we save in bonding fees and appraisal fees and construction fees and timing of cash flow fees and timing of interest payments. We save our legislators quite a bit of money in that
So it
space.
seems like that would be an important part of the conversation about that you could be making more money for the legislation.
Absolutely.
And
Yeah.
what's my other thing? Oh, I forgot.
Yes. Yeah.
Okay.
Plus the profit we generate back to the general fund for them to utilize. Yeah. Yeah. If Bank of North Dakota didn't exist, then our state would have to have our $6 billion in operating funds deposited probably with JP Morgan. And we'd be riding the short end of the curve. And then, for like the hospital bill, they'd just have to bond that right away. If they didn't want to didn't have the funds to appropriate, which they didn't for that infrastructure, so they'd have to bond it. They'd have to continuously fund the revolving loan funds. So there's a lot of little things that start to add up over time. It all kind of gets summed up into there's real power to owning your own bank.
Yes,
Yeah.
and that brings up the question that I just remembered. I'm guessing that the really large banks are in opposition to state banks being approved across the country.
So my speaking with the folks out in Massachusetts, New Mexico, Vermont, yes, absolutely. They come in with a lobby and they don't like it. And I can see why. That's a big part of their deposit base going to go away, and that hurts their business model. It does. That's part of it, yeah.
Thank you.
And we do maintain a report on our website about where our public deposits are stored now. So if anybody's interested in looking at that, you can take a look at our website and look at our public deposit report. We have time for one more question.
Okay.
Happy to talk to more people about it afterwards.
You call the Bank of North Dakota the only surviving public bank. What are some potential pitfalls here, or what has caused other public banks to fail? Bank of North Dakota is not.
You know, I haven't studied the failure of the others. I should. I really should. In fact, I've been wanting to do that. I'm glad because I need to get on that because it's fascinating. I have my own opinion on why we are surviving and what makes us successful. And it starts with our structure, like I said, that allowance for me to stay out of the fight and just run a good bank fulfilling on the mission and be able to run the complexity of a bank because it's really complex to run. I also think there's been some serendipity. There's been, survived 13 Supreme Court battles, the luck of really good CEOs being hired to run it, because it only takes one bad CEO to take down a company. And I think we see that in the news all the time, right? It takes one. So we've been blessed with 15, and hopefully I can keep her running. There are pitfalls to running a bank. You can put too much risk on. You absolutely can. You can put on too risky loans and they don't pay you back, and all of a sudden you got charge-offs and losses and your profits go down, and all of a sudden you need money from the legislature to cover your losses. There's the danger of it. You can run your balance sheet too hot, too many loans. Most banks run at a 75%, what's called a 75% loan to deposit ratio. You're only lending out 75% of those deposits you have because loans are not liquid. If your deposits shrink, you can't really sell those loans in a good way. So you got to maintain a nice set of liquid securities like treasuries, mortgage-backed securities, and there's all types of management of that, and then you're talking management of the interest rate risk environment over time. So it gets really complex. That's why I really urge, if you're going to form a bank, get good bankers to run it, really good bankers who understand it's not about making money, it's about managing risk first and then make money after that. That way you'll be pretty safe. Yeah.
Thanks so much, Don.
Okay, thank you everybody. Thank you.